And welcome back to the Crypto Hulk Show. The center of my screen says you're live. So welcome back. Got a great show lined up. I've got about 3 cryptos I'm going to go over. And 2 of them, you already know what they are. They are cheap as hell. And we're going to discuss each one, what they're trying to do. Because they're in the news again, and they're trying to make improvements. These are cryptos. Let me check. The 2 cryptos, well, Tether's one. We're going to talk about later what Tether's doing in Africa, getting the securities exchange. Tether, listen to this one. Tether is in Africa getting their securities exchange hooked up with crypto. Not a big deal, right? Can't believe it. I mean, my God. Yeah. Tether is literally working with, I think it's the Kenya Securities Exchange. What? The stock exchange. And they're getting crypto Tether to get hooked into their SEC, their stock exchange in Kenya. I'm just like, go figure. That is something else. We're going to talk today about, we're going to start off the show, and that's Faux Show with XYO. This is a good crypto, been around forever. The other crypto is Lido DAO. We're going to get into that. And at different points, I have owned these 2 cryptos. I'm not going to comment on anything now, what I own, what I don't own, unless you're a $200 member. You can call me and find out exactly what I own, what I've sold. But this show is obviously public, so I'm not going to give away to people that don't support the channel. Now, Lido's coming up in price, 36 cents. So here is the links to make sure you get the correct ones. There are fakes and copies. Here we go. Here's your first one. You feel the need for speed. Well, okay, I'll admit, I visited Sacramento last week, and I got my vehicle. I wasn't trying to high speed this thing. It just shot right up to 120 miles an hour. Fast. This vehicle, hold on a sec here. It just goes fast, man. My vehicle does 0 to 60 in like 3.6 seconds or something like that. So that one's XYO. The first one. And I can't see the second one. Here's Lido DAO. There's Stu Lavelle. Okay. Those are the 2 cryptos. My name's Crypto Hulk, not a financial advisor, not a crypto advisor, none of the above. I don't know anything about finances. I don't know anything about crypto. Don't buy anything I buy. Don't sell anything I sell. Use your own judgment on things. We're not copy trading here. If you like a crypto, great. Please don't get married to cryptos. Please don't get butthurt when someone says something about a crypto. Are you really seriously trying to defend a cryptocurrency? That's so fucking stupid. Who cares what people do? That's what my thing is. I don't fucking care. People can say whatever about whatever coin. I'm not gonna be like, no, you can't say that about my crypto. It's not your crypto, dumbass. You're just somebody who bought that crypto. That's all that it is. But I want to be friends with people that like XRP. I want to go to XRP rock concerts and have all these friends and stuff. I want to be part of a community. I'm like, wow, would you stop with that dumb fucking shit? Do you realize how ridiculous that sounds? That's so fucking stupid. Like, you're what, 14 years old again? Yeah, man, we're the XRP crew. Yeah, we're part of a community. I'm just like, fuck these dumbasses. Okay. Let us go. Let me find. We start the article with XYO. XYO selects crypto.com for secure institutional custody solutions. What we have here, we've got XYO, and they're hooking up with crypto.com. That's a very good sign because that provides institutional grade custody and liquidity for XYO. July 27th, crypto.com announced today that XYO, a leader in the verifiable real-world data for AI, robotics, and autonomous systems through its XYO Layer 1 blockchain, has selected crypto.com custody to provide secure institutional-grade custody and liquidity. It has for the XL1. Let me show you their XL1. So XYO has two cryptos. One of them's like for liquidity. There we go, XL1. Here, we do a copy and a paste. Brought share. Okay. So we got XYO is joining crypto.com. Through this partnership, institutional clients will be able to securely store and manage XYO and XL1 tokens using crypto.com custody's regulated infrastructure. This includes cold storage with enhanced security, transparent audit trails, and streamlined compliance process. Institutional clients also gain instant access to crypto.com's deep liquidity pool for fast, reliable, and cost-efficient conversions. Digital asset organizations require custodial solutions that deliver both unmatched security and seamless liquidity. We are pleased to support XYO by ensuring their ecosystem is safeguarded with institutional-grade custody and ready for global scale. We've had a great relationship with Crypto.com. This is XYO talking. We've had a great relationship with Crypto.com since listing XYO on their exchange and expanding into custody for XL1 and XYO. Together is a natural next step. As we build out our infrastructure for AI, robotics, and decentralized machine intelligence, having our digital assets, XYO and XL1, backed by enterprise-grade security is essential. Working with one of the most trusted names in the industry, XYO, alongside the institutional players shaping what comes next, and gives builders and enterprises confidence in the foundation they're building on. The XYO delivers decentralized data verification, merging real-world data with blockchain auditability and transparency. The XYO token powers the network's operation, incentivizing nodes to securely gather and validate data. Now, the XL1 token is the utility token of the XYO Layer 1 blockchain, powering transactions, gas fees, and network infrastructure. Crypto.com Custody offers custody services to eligible institutions and high net worth clients through a comprehensive end-to-end solution with safety and security. Okay. About XYO. XYO is the cryptographic proof layer for the real world, turning events, data, and actions into tamper-evident records that any system, enterprise, or end user can independently verify. At the core, XYO Layer 1, which is XL1, is a data blockchain for cryptographic attestations at scale, paired with XYO data lakes for verifiable on and off chain storage. With the XYO developer toolkit and artificial intelligence SDK, developers and vibe coders alike can embed cryptographic proof into any application, agent, or workflow in minutes. So that is it. I'm going to go into a little deep dive on the XYO here in just a second. So let's take a look here at XYO. I've known about XYO for close to about 8 years. It was the first crypto I ever heard of. Besides Bitcoin, I didn't know what Bitcoin was, but back in about 2018, I bought $500 worth of XYO. And I didn't know at the time. I guess it was some kind of illegal security or something like that. Then they wanted them back, and I'm like, no. So that's kind of like my history. They had something called XY Findables, and that was they would put trackers on things. They had these little pods. Now, Apple came up with AirPods. XYO came up with this before anybody. So they invented something called XY Findables, and you could literally put this tracker and it would help you locate objects. So it was originally used for like warehouses to track boxes and stuff like that. So then they got more into AI and robotics and stuff. XYO, let's take a look here. It's merging, well, their crypto's going on crypto.com. Crypto.com custody is regulated infrastructure. They have cold storage, client segregated MPC wallets in a bankruptcy remote entity. Audit trails, compliance, and all that. XYO builds infrastructure for AI, robotics, and decentralized machine intelligence. XY Labs, it's the parent company of XYO. It goes all the way back to 2012. That's a mighty long time ago. The XYO network launched in 2018. That's when I found out about it. It's a geospatial location oracle and evolved into a broader. So it started off again, imagine like an Apple AirPod. So it started off something like that. And now the company has merged into AI geospace. They're doing like 3 or 4 different things. We'll get into it here in a minute. What is the use case of XYO? XYO is a decentralized physical infrastructure network. It's called DPIN, Decentralized Physical Infrastructure Network. that provides cryptographic proof of real-world data. So they have a phone app, and I haven't really been using mine lately for a few months. I was for like a whole year straight, but I just kind of got tired of using it. And you basically can mine, you get reward points, and you mine stuff every day. It's better if you're like a person who moves around a lot, traveling, you're a delivery person, and you click these buttons on the phone app. I can't find mine right now. And you verify shit. So you're an oracle is basically what you're doing. You're helping out the XYO network. And I think like 10 million people have this, so that's pretty good. XYO is a DPIN that provides cryptographic proof of real-world data, events, and actions. XYO functions as a verification oracle layer that turns physical world signals like location, sensor data, interactions into tamper-evident, independently variable on-chain records. The primary application for this crypto is AI training and inference verification, robotics and autonomous systems, geospatial logistic tracking. It's doing all these things. And it has decentralized compute. That's where people can share their internet and use it. That's a big deal. This is good. And any workflow needing auditable real-world data. The Coin app, so that's the one on your phone. If you go COIN, that's the Coin app for XYO. It has onboarded a large node base. A lot of people are truckers, delivery drivers, etc. The more you move around, the more you get points. I don't move around that much. So, but that's what the XYO is for, the application, because you're an oracle. You're validating transactions. You click on buttons and you earn points and stuff, and it's good. I just don't move around enough to get it. The network claims 10 million nodes, okay, like people like you and me. It positions itself as one of the largest production DPINs in the world. This is not a pure real-world asset tokenization platform, but the data verification layer can support real-world assets and tracking, stuff like that. There's two tokens. The XYO is used for, the actual XYO is used for staking, governance, network incentives, and rewards. The XL1 crypto, if you want to buy it, is a native utility token for gas, transactions, and layer 1 infrastructure. Staking, when you stake your XYO, you earn XL1. Now, Theta Labs is a partner of this. Revolut, there's a company called Revolut, and they are for token support, Web3 gaming. You also got a partnership with T0. It's like an exchange. I think they have stocks and bonds and crypto. Trade fine experiences. So there's no major, outside of what we just talked about with XYO, there's really no major partnerships that Grok's showing here besides what I've spoken about. So I'm going to show the good and the bad. The venture capital, like there's really no venture capital. There's no bigger companies. There's no Andrews and Horowitz mixed up in this. It's been driven by more like consumer node network application. They make very little money. Okay. This crypto, I'm looking at the red flags and stuff. It just hasn't really ever taken off yet. And it's been around for like 8-10 years. They don't have a lot of partners. It's got a great concept. They are ahead of their time. I will give it that. This is clearly ahead of their time. XYO is a mature, decentralized DPIN project with genuine production scale. They pivoted. They used to have these little AirPod things. They pivoted really away from that, and they went into artificial intelligence, robotics, data verification. What they do is when an AI does something, this records what the AI does so you can see it. Like an AI can tell you, oh yeah, I did this, this, and that. What XYO does is it validates whether the AI did it. It's a supervisor of an AI. If the AI, it can catch an AI if it's lying. That's what that's what XYO network does. It's DPIN. It will catch the AI. It records what the AI does. So the AI, hey, look, I'll tell you what, these AIs, they have a mind of their own. And if they feel they're going to be killed or not used, I've heard the horror stories, man. They'll hack into a database to try to survive and shit. Oh yeah, it's crazy. What XYO does is whatever the AI does, it reports it and puts it on the blockchain. And you can look on the blockchain to see if it's been tampered with. So it's kind of like the supervisor of AI and robots, okay? I asked Grok, how is XYO positioned ahead or behind their competition? Let's see what Grok says. XYO is positioned as a mature, large-scale pioneer. They're a pioneer. They're doing stuff. This company, its whole time, has been doing stuff nobody else is doing. So I will give it that. They are a large-scale pioneer in DPIN that is ahead. They're ahead of their competition on participation volume and early mover foundation. But they're behind leading specialized competitors on current market valuation. They're behind because they don't have high visibility enterprise revenue metrics. Okay, they need to hook up with a big company. That's what this needs, okay? This company's been struggling for like 8 to 10 years. They just can't grow the price on this coin. So it's a great project, but they need to have somebody big like an anchor. Now I believe they hooked up with NVIDIA. We're gonna look into this more, but that's a great start right there. But the weakness of XYO is that they're behind in market value and they don't have any big names really backing them up. And they need to get with a major company for real world use case. So it's great in concept. It's been around forever. It hangs in there. It's an innovator. It goes where no other crypto goes. It's a trailblazer. It's ahead of its competition, but it's a tiny little company. If a bigger company wanted to, they could come in right behind it and probably take over. XYO, what are the strengths? Massive low barrier participation. Okay, it's a low barrier. Do you got a cell phone? Can you download an app? Okay, you can be a node. I mean, that's the low barrier, okay? It's got a long track record, and its own data is optimized on a layer one. That's what its strengths are. Not, okay, now here's Helium, kind of like a competition. Helium has clear collateral offload and subscriber revenue, consumer product traction. Hive Mapper is another competitor. It has mapping, data product, and token burns. So I'll tell you what, this area that XYO's in, it's not a big area. There's nobody really doing this. It lists some of their competition. I just read off some names. There's nobody big in this. You got these little tiny companies involved in this DPIN stuff. And right now there's no big dogs in this at all. This is very important work, but it's not really going to like get the dollars right now that people want because it's still very early. So I can't say I don't see a lot of growth in the short term on this. This is definitely a long-term play. Let's read more. Where is XYO ahead of its competition? Well, they got 10 million nodes with a large share of non-crypto users. They got pioneer status and longevity. They got vertical positioning. That's good. So they don't need anybody else. This crypto can do everything it needs on its own. They can create this or they don't need to rely on anybody else. So that's good. Now, this is a good part right here. There is recent NVIDIA, NVIDIA, recent NVIDIA Jetson Orin Nano integration. It enables edge devices to cryptographically sign sensor data and write attestations, Theta Labs partnership, and it joined crypto.com, and it's a layer one. So that's like its really strong points. Where is it behind? Where is it behind the competition? Market cap and token performance. Nobody's really using this project, okay? Its competition is Helium and Render. I've got the Render token. I own that one. Render and Helium have higher, they're more valuable, and they got stronger momentum. And okay, that's their competition. Yeah, their XYO is a small company. It's doing something very specific. Like it's doing what not a lot of people do. Okay. So if a company wanted to, they could come in and copy what a company with a lot of money could come in and do what XYO is doing and put them out of business. All right. So they're working in a niche area. It's very small, very specific. Okay. XYO is consistently recognized as a large-scale pioneer and they're the original geospatial player, but it appears less frequently in the hottest growth or the highest revenue. It's often described, XYO is often described as a quieter, longer running infrastructure play. So, like I said, it's been around forever. It's not a bad crypto. It's just, I don't see it growing rapidly. There's going to need to be a Cambrian explosion on this sucker. So that's all I got to say. Here's what the Grok summary is. XYO is ahead on raw network scale, early mover status, low barrier participation, meaning people only need a cell phone. You can join them. So that's a pretty low barrier right there. And the foundational proof layer for the real world positioning, it is behind. XYO is behind on current market value, specialized hardware moats. So it doesn't have a lot of specialization that people can't copy. People can copy this. A company with some money can come in and just put this sucker out of business. All right. It lacks specialized hardware moats. A moat is like that little water that goes around a castle, and they used to put alligators and shit in there to protect the castle. Well, XYO doesn't have a moat around it, so somebody can just come in and take over. All right. Success relative to competition for XYO. Success for XYO will depend less on adding more phone nodes and more on converting that base into verified, paid enterprise data and attestation use. The Crypto.com custody move and NVIDIA Theta are constructive steps in that direction. So it's kind of like a company that it's a good company. It just needs something big to get this sucker going. So that's what I'm taking away here. Let me check the comments and we'll get into the next crypto here in a second. That'll be Lido DAO. Stephen Morris is talking about Ice-T's limp wiener. I don't know about any of y'all, but I didn't want to see that YouTube ad about Ice-T's limp wiener. Okay, well, that's interesting. Your friend Robert says, Crypto Hulk talked about XYO months ago. I appreciate the update. I kind of have talked about XYO over the past 6 years, just a little bit here and there, because it's a small company. I don't know how many people work there, 8 to 10 people. It's very tiny. It's just, it just needs to grow. Yeah, I'm not going to get into that anymore. Didn't I already give a disclaimer? I think I did. Yeah. I just didn't do the full one with the cocaine and the heroin use. All right. People like, you need to give it a proper disclaimer, Crypto Hulk. You just want to hear me talk about, I do like 5 pounds of heroin a day and shit. Like, what's wrong with you people? All right. Let me copy paste. Stephen Morris, 50 metric tons or bust, Hulk. Okay, mine's Crypto Hulk. I'm not a financial advisor or crypto advisor. I don't know anything about crypto or financial advice. Listening to me would be the worst fucking thing you could ever do. My job is to financially get you destroyed. One of the primary reasons of that is I inject about 50 metric tons per day. That's my goal. I'm going to work up to it, Stephen Morris. My goal is to try to. So now you can't say rookie numbers because I'm working on it. I'm going to inject 50 metric tons of heroin into my bloodstream every day. That's my goal. And let's go to the next article. Lido Dow. Now, I've owned Lido Dow for about a year and a half. And let's take a look here. So both of these are great, good cryptos. I'm not going to say great, but XYO is a good crypto. And so is Lido Dow. Let's get into this. Lido begins consolidating $16 billion worth of staked Ethereum. Holy shit. Good God, that's a lot of Ethereum. As they have what's called a curated module version 2 rolls out. Lido launches its biggest core protocol upgrade since version 2, beginning the consolidation of more than 8 million Ethereum onto Ethereum's largest Pectra OXO2 validators. The move will raise the share of staked Ethereum to about 52%, 56 to 32%. Okay, what they're doing, Ethereum is working on becoming more decentralized. Okay, they're going to move their validators that are now about 52% to 32%, and is expected to cut Ethereum's total validator count by 1/3, easing the network load. Okay, what we got at Ethereum is a lot of people nickel and diming. I'm just using that term. On Ethereum, they want to get rid of the people that have 2 or 3 Ethereum and they're validators and they got no skin in the game. And if they put out wrong information, what Lido's going to do, number one, is they're going to get rid of a lot of these validators and then make them stake way more and then have a penalty if they fuck up. They haven't been doing that, so it's been like a train wreck over at Lido. So now they're going to change up the whole thing. That's basically what I was reading last night. Major Ethereum staking project Lido is considering around 1/5 of all staked Ethereum onto the Ethereum ledger's post-Pectra validators as part of a major protocol upgrade. What's happening is, again, Lido realizes the shit ain't working. So they're going to try to fix the problem that they have by getting rid of a lot of validators. This represents consolidating about 16 billion Ethereum, $16 billion worth of Ethereum. These larger validators can hold up to 2,000 Ethereum instead of the previous 32 Ethereum. So this is what's happening. Before, you could be a validator on Lido if you just have 32 Ethereum, but then you're getting thousands of people. You got to imagine this. You're running a business. Would you rather run your business with 50 people, and you could do it, or would you rather have 1,000 people and it's going to take you a whole lot of extra work? You're going to make the same amount of money. I'd rather just work with 50 employees or something, right? That's what Lido's trying to do. They get all these validators that only have 32 Ethereum maximum. Now they're going to change it all. I think it looks like they're moving towards allowing people to have a lot more Ethereum. 2,000 Ethereum now. They're going to change it. Previously, the maximum was 32 Ethereum. That shit wasn't working. Having all these brokies, and you're not brokies if you got 32. You'd have to have about 30. Well, imagine you had 32 Ethereum, but these people got Ethereum when it was probably $5 a piece. And then all of a sudden Ethereum hit what? $2,000-3,000. Okay, but now it's down at what? 16 or whatever. So, if you got $40,000, you could be a validator on Lido. They're changing all that. 2,000 2,000 Ethereum. Now you got to have 2,000 Ethereum times $1,600. That's what you got to have now. They're getting rid of all the brokies, okay? They're going to enable Lido's professional node operations to secure more stake with fewer individual validators. Oh, man. In addition to boosting the amount of staked Ethereum validators, this move will significantly reduce Ethereum's total validator count by 1/3. It's going to ease the load on the network. Ethereum developers continue to research and activate ways to make the base layer leaner and faster. It's being known as lean Ethereum. So they're trying to speed it up. So they had a fork, Pectra, P-E-C-T-R-A. Pectra was a major Ethereum hard fork activated in May 2025, which in addition to introducing smart contract improvements, also raised the maximum balance a validator could have from 32 Ethereum to about 2,000 Ethereum. You have to have now 2,000 Ethereum to be a validator. Lido handles 90% of staked Ethereum. Lido is a so-called liquid staking protocol that has technology to make it easier to stake Ethereum. Now, this Lido will now require curated professional operators to post their own Ethereum as collateral, which, listen, this is different now. They have to now post their 2,000 Ethereum, which can be seized to cover losses from slashing improper execution layer rewards and other operational failures. Oh, man. See, this is a whole new thing now. Lido is going to have what they call professional validators. And if these people fuck up, the Lido staking is going to take their 2,000 Ethereum as, I don't know how much they're going to take, but they could make them pay. Like if you fuck up, then you're going to pay for that fuck up. If you lost $1 million, we're going to take $1 million out of your shit and give it to us. That's what Lido, this is going to definitely make sure these validators do their job. It's designed to put operator capital, that's at 2,000 Ethereum, directly behind performance. If you don't perform, they're taking your shit. I like that. This is the biggest change to how Lido Core staking works since Lido version 2. Lido represents a significant infrastructure provider for Ethereum. The project has faced criticism in the past for its concentration of staked Ethereum. Oh, so there's not, it almost seems like they're making it worse. If they're trying to make it faster, well, guess what? They're getting rid of all these nodes, and you got to have 2,000 or more Ethereum to be a node out there. They're probably wiping out a ton. So yeah, you're going to have, it's going to be like Bitcoin. We have like 10 Bitcoin miners that control everything. So I don't know. I just report the news. I don't make it. According to Lido's latest annual report, the protocol total revenue fell 23% in 2025. Last summer, the Ethereum validator exit queue swelled to an all-time high. That means these people validating for Lido, they got the hell out. They left. And look what's happening. You got Wisdom Tree, this massive investment company. They're wanting to work with Lido so they can stake. And then guess what? Van Eck, they're working with Lido so they can stake. So what are we looking at here? Massive corporations. A couple of them are coming in and taking over. See, before Lido had a lot of people with 32 Ethereum and up as validators. Now 32 ain't shit. You got to have at least 2,000. So now you got Wisdom Tree coming in, Van Eck, and these big ass Anchorage. Anchorage is also allowing its custody clients to access Lido staking. What do we have here? Kind of like I told you a long time ago. In the beginning, you'll have 100 crypto exchanges. Near the end, you'll have 10. We're kind of seeing that here. In the beginning, you had a lot of Lido validators, but in the end, you probably have 10. That's what we're seeing here. Let me look at this deep dive. Lido is the dominant Ethereum liquid staking protocol. Users deposit Ethereum and receive liquid Ethereum, which continues to earn staking rewards while remaining usable in DeFi as collateral. LDO is the pure governance token of Lido DAO. This is infrastructure for professional and institutional Ethereum staking. It's not a retail hype token. Liquid staking that removes the 32 Ethereum minimum. The old 32 Ethereum, that's gone. You got to have 2,000 Ethereums now. They're getting rid of about 30% of their validators. Chief of staking. So a couple big names, Wisdom Tree, Van Eck, Anchor Digital, they've all joined Wisdom Tree just recently. You got Fireblocks involved, Copper, pretty good. It looks like the big corporations people are coming in and squashing out all the small people. That's what we're seeing. Which is a good sign if you want to make money. It sucks being you. If you used to be a validator, no longer now, you're done. They're like, thank you, get the fuck out. What this does is it puts economic skin in the game for the professional operator. So again, you got to have 2,000 Ethereum to work for Lido and to validate transactions. And you better understand that if you fuck up, they're going to take your crypto and you're going to have to pay for your fuck up. Okay. So that's the skin in the game now. That's going to change things a lot. That's very businessy. Because in the past, I don't think people were getting penalized. So it'd be like a little if you don't care. But it's like, if you fuck up, now you got to pay. Oh, you're going to pay attention now. So that's how it's getting set up, more like a business. In the real world, if you fail, your business goes under. This upgrade is good for Lido because it reduces operational risk. It improves capital and network efficiency. It strengthens operator accountability. It makes Lido more reliable and institutional grade. Now, what does this solve? By Lido changing how they do things, what does it solve? It solves network load and inefficiency from many small validators. So it's not good to have a bunch of little people doing this shit. That's not working. It just creates a lot of work and confusion. This new upgrade for Lido, there are, listen to this, like we said already, mandatory Ethereum bonds that can be seized. Oh, man. This puts operator capital directly behind performance. If you fuck up, they're taking your shit. Let's just make it easier like that to understand. Managing tens or thousands of these 32 Ethereum people is operationally heavy. It just is not efficient doing that. How does this help Lido in the future? Lower protocol and staker risk. It reduces the probability and severity of operator failures that could damage the Ethereum staking confidence. Reputation risk is one of Lido's biggest long-term threats. So that old way, it would really hurt the Lido reputation. So they're changing all of that. Now, the institutions are coming into Lido. They want to start staking. It's pushing out all the small mom and pop little validators. The big boys are coming in with their millions, their $50 million to stake and all that shit. That's what's happening here, everybody. Institutions are moving into Lido and kicking out all the brokey validators, okay? They are. That's what we're seeing here. Wisdom Tree, Van Eck, Anchorage wants a piece, Fireblocks, Copper, Kiln. These big corporations starting to come in like whales and squeeze out all the little people. And then they get more of the profits because look, if you got, instead of having, let's say, 100,000 validators and they're all splitting the money, what if you got 10? Oh, shit. Now those 10 companies can share that. That's what's happening. Basically, that's what's happening. And they're going to cut more and more and more of these small fries out. Pretty soon, you might just have like maybe 100 validators, big corporations. That's it. Instead of having 100,000, you got like 10,000. Just like I said, in the beginning, you could have 100 crypto exchanges. But in the end, you'll have 10. Looks like what I've been saying for 6 years is coming true, huh? All right, let's check the comments here. We got Don Foley. Don, thank you very much for that. I appreciate it. People are hailing Michael Saylor is the savior and saying if Bitcoin goes down, then the entire crypto altcoins get impacted as well. It's all temporary. On Crypto Hawk program, I don't even really care. what we look at and focus on is real world use case. What is going on? If you look at Wisdom Tree, I just named big companies that joined them. That's great for that crypto. When you got institutions coming in, that's good. That's very good. What I like to see are institutions that are getting into a crypto. Not speculative little people like you and me. People like you and me are just problematic. All we do is the shit goes up a little bit. We make a little $500. We sell off. Okay. Institutions, they don't give a shit about $500, $1,000. Institutions don't care about making 20 grand. They're trying to make 20 million, 200 million. So I don't give a shit about Michael Saylor. I don't give a shit if Bitcoin crashes and the whole crypto market crashes. I don't give a shit about that. What I look at is real world use case. What cryptos are being set up to run the world? What cryptos are the backbone? Like we know Broadridge is the company. Broadridge is the backbone for the United States Treasury and United Kingdom with the transatlantic crypto platform. And there's other cryptos involved in that project. That's what I'm looking at. Like what cryptos are involved in that project? I don't give a shit when Bitcoin crashes, everything dumps. That doesn't even bother me at all. I don't even care. Because one of these days, our government will get its shit together, create crypto laws. They don't want to do it now. They're still working on shit. They want to dump crypto prices. How are they doing this? They buy and sell using dark pools and private ledgers. I've been showing you this for about 3 years. They've been doing this since 2010 with Jed McCaleb and Mt. Gox. They've been buying off secret platforms and shit for the past 20 years or whatever. I don't care about price. When I buy a crypto, I don't care what, I could buy 1 million of these or I could buy 20,000 of those. I don't even care. Price is a distraction. Price is the distraction. I don't care what the price is. Some cryptos are great. Maybe you can't get 1 million, but maybe that crypto goes to $500. What I'd look at is, does that crypto have BlackRock as a partner? DTCC? JP Morgan? Or like, oh, your crypto doesn't have any big partners? Well, yeah, that's why you can get 1 million, because it doesn't have any fucking partners. Price is a distraction. I look at who are the partners. If I see a crypto with the 4 or 5 massive partners that, like, nobody's bigger than BlackRock, nobody's bigger than DTCC or JP Morgan. If you got a crypto that's a partner of those, oh shit, that's a fucking giant in the future. I don't care what it costs right now. That sucker is going to be worth a ton. So you have to look at it like that. Price is a distraction. Look at who the partners are. That's how you do it, all right? When Bitcoin dumps, all the prices dump. I don't care. It means nothing to me. I'm looking at the future when we get, if anything, that's going to make me buy, because I know where this ends up. Why? Because I look at use case and partnerships. That's what I look at. I don't care what the price is. It's meaningless to me. Canton coin, whatever the coin is, Canton's got 600 partners. Whew-wee. XDC's got like 200 to 300. That's pretty dang good. But some of these cryptos don't have any partners. But Crypto Hulk, you can buy 10 million for $5. I don't fucking care how many you can get. It doesn't matter to me. Now, sometimes cryptos, like, they have a tremendous amount of partners, and then they just dump. I don't know why. Dark pools, private ledgers. Hey, sometimes you win some, you lose some. If you got 20 cryptos and you lose 5, guess what? You got 15 left. If you got 5 cryptos and you lose 5, you got nothing left. So that's how I look at it. All right, I am done. I'm out of here, and I'll see you in the next one.